All right, so this is the mid-market summary. We've got the three indexes up, the two time periods that we primarily track. And um, Michael, let's just walk through what we're seeing on these charts because they're starting to look like they're showing slightly different patterns. When I look at SPX, I'm seeing some red there that I don't see on RUT and on NDX. So let's start with NDX. Looks like we've kind of flattened out. Um, Any signals in there that you like that you would find tradable?
Not right now. I wouldn't mark the 5 minute looks like it's building here, maybe to go higher, but we're right against the Bollinger Band, so I probably wouldn't take that trade more than likely. And it just all depends on how it closes here.
So you wouldn't
But
take that trade, although there's a blue bar, and if that blue bar
yes,
closes, you still might not take that trade because the Bollinger Bands are pinching pretty tightly together. We're pressing up
pretty tight.
close to the
That's
upper
right.
Bollinger Band. So on one level, that is actually a good sweet spot trade. We're double stacked to the upside on the 515. We're double stacked to the upside on the 39. But you've got the Bollinger Band right there. And also, when I look at the last several prints, it looks like we've pretty much just flattened right out, pretty tight.
Yeah, we have, but I will say this though, if the bar did close up and I like the risk, I might take that trade. So
Okay.
just have to wait till it
So,
closes.
so when you say you like the risk, what does that mean?
Well, the risk is, I mean, I always go back to the last support level, which is right here, the lower support level than we're on now, because you can see this is a little bit lower than that support level is, and it's hard to see on the chart, but it is just a tad bit lower. So if I did go in right here at the 45.56 range, I'd have my cover or stop point at 46.53, which is very low risk, very low.
Yeah, so you've got about a 3 point risk, and so what does that mean? If it moved down to that level, what would you do?
Well, I'd either cover it and make it a a call credit spread, or I would turn it into a debit spread.
Hmm. Okay,
That's what I would do. I'd sell
pretty
to open something against it,
yeah, pretty
or I can,
straightforward.
or I just might close it. I mean, it just all depends on my drawdown.
Sure. So it's pretty straightforward, not a lot of risk in that trade, but it doesn't mean you're going to jump into it because
No.
you just want to feel comfortable that there's opportunity in that trade. A little different situation on
That's correct.
SPX.
Yes.
So we're starting to see 3 minute and 5 minute resistance printing on SPX. And I see the 3 minute resistance is stair stepping lower,
Yes.
but we're sitting right above 9 minute support as well as 15 minute support.
That's right.
So we're in a pretty tight range. Put your cursor on that 3 minute resistance. Yeah, what is that? That's 2173, right?
Yes. Uh-huh.
So 2173 and support, 9 minute support is 2172.
Yeah, it's right around 2170. Yeah, 2172.
Yeah, so a pretty tight range in there, not a lot of opportunity for movement. So even, which I wouldn't, even if you felt like this was a place to go short, there's not a lot of room for it to move back down to support. So you got to take into account that 9 minute support and what that will do potentially to your trade.
Yes. And 15 minute too. So
Yes, yes. Um, RUT looks a lot like NDX, more so than
yes, it does.
SPX. We're double stacked to the upside on both time periods, but we've flattened out. We're in a pretty tight range, pressing right up against the Bollinger Bands. Same story, Michael, that yeah, you might take the trade there because there's not a lot of
Yes,
risk to the downside.
that's right.
Okay.
That's exactly right. Same exact philosophy on that.
So those of you who may not day trade might get into one of these trades, and what you need to do then is be prepared to create a spread. My personal bias on upside trades and buying calls is to go out of the money. I know Michael likes to go in the money. But I like to go out of the money, and then if I end up turning it into a spread versus closing it as a day trade, I will turn it into a call credit spread. So I go far enough out of the money, generally above Bollinger Bands on 30 and 60-minute time periods, and give myself a forgiveness factor that's built into that trade. So there's really not, in my opinion, a lot of risk to taking a long position here, although things have flattened out and the range has tightened. Because as Michael said, if it moves lower, you've only got a couple of points on NDX and a point or so on RUT for it to move lower before you may decide to cover it. And covering it in this case would be not necessarily just taking a loss, although that certainly could be your choice, but it would be converting a long call into a credit spread. And by doing so, you're going to take the majority of your capital back. You're probably going to take all of your cash capital back, but now you're going to create a spread of a 5-point spread. So you've got that spread less the credit on the position that is your risk. But your risk will have been reduced significantly from just the buy to open of the long call to being the spread risk less the credit. Anything else you want to share about the Able Trend charts?
No, I mean, no. Like I said, they're just really flat right now, so there's really nothing to really do. I mean, just trying to give a signal on the 5 minute on the NDX here. You can see it's two blue bars in a row, but it's just getting so tight right there. I just don't know if it's gonna. It could break out and move up to the high for all I know, but in my experience, it's gonna stall right here, maybe.
And someone in the live trading room was asking just a little while ago about whether or not they should have their own license to the Able Trend charts or whether they can just rely on viewing it in the live trading room. I know Allison responded to that, but I just wanted to weigh in also. This is certainly your choice, but we don't always show the Able Trend charts. In fact, the last few days, the last 3 days this week, it's been pretty unusual that we've had them showing the majority of the time. Usually we are primarily showing our positions page and our order status page because we rely on you to have your own charts. We do show them periodically, but even that, when we are showing them, we're sometimes talking about other time periods, 30, 90-minute time periods, 60, 180 time periods. We're not necessarily showing every time period, but we might be making reference to them. So we can't promise that we show the charts all the time, but it's been, I think, a good exercise the last few days to have them up and be able to talk about them. And I decided to do that because we really have had very, very little minimal activity. We're not taking many trades. Michael's taken a couple trades in his account. I've not really taken any trades. I am going to talk about one here in just a minute on a stock, which we rarely ever do, but I'll explain to you why I did that. So it's good, I think, to have all of the tools that you need in front of you, and then you can take advantage of following along with our discussions. So I'm going to pull you over to my screen here, and I want to show you
Okay.
my bar charts here. Can you see that okay?
Yeah, see it. Great, Mark. Perfect.
So I'm going to start with ISRG. This is a stock, Intuitive Surgical. This is a stock that I used to trade quite extensively, and I still periodically go back and, excuse me, look at that stock. And I'm really looking for extreme patterns on stocks. I don't trade stocks very often, but every once in a while when I see what I consider to be an extreme pattern, I will consider taking a trade. So I was just browsing through the stocks because I've already seen everything that I can see on the indexes for now, and there's not a lot of pattern shift on those indexes for right now, and there aren't any trades that I'm interested in taking on the indexes. So I came across ISRG. It's one of a handful of stocks that I do like to trade, or I have liked to trade in the past and traded extensively. And here's what I saw. ISRG on the 1-year daily chart has a very, very strong Bollinger Band snap pattern. Now that's on the 1-year daily. Today we actually opened and then moved higher above the 3 standard deviation Bollinger Band. We retreated back to just about where we opened, and we're still well above the 2 standard deviation Bollinger Band. Now, on Bollinger Band snaps is the one exception to my rule that I generally follow Abel trend 3.9 and 5.15 signals. I use the Abel trend charts for the vast majority of all of my trading, but as you know, if you've been in the room for any length of time, periodically I will take a trade on the indexes just purely based on Bollinger Bands, the Bollinger Band snap pattern. I know Peter's done quite well in the last couple of days on his Bollinger Band snaps. Kudos to you, Peter. That's awesome. And it's a relatively simple trade to take. Now, stocks don't always perform as well as the indexes, which is why we prefer the indexes. But I saw this pattern on ISRG today, and I decided to go ahead and take the trade. I made the decision to take the trade on 2 primary factors. One is purely the Bollinger Band snap, and you can see that, where the price has moved above the upper Bollinger Band. And before I just blindly went ahead and said, I'm going to go ahead and take this trade, I went back and I looked at prior incidents where we had moved either up to or above the 3 standard deviation Bollinger Band. So here was one back here on the 23rd of June, and boom, the next 2 days were significantly lower. Here was one. Now there are a whole bunch of patterns where we've just kind of peaked above the 2 standard, and many of those worked out. But I'm looking for ones that moved up all the way up to or almost up to the 3 standard deviation band. There was another one on the 20th of April, and then boom, you can see starting the next day, it started to trickle off. There was one on the 4th of April. It did move back lower the next day, probably enough to grab a profit, but not back down in the lower part of the bands. And then it started to move higher and continue to move higher for the next several days until we reach that breakout on the 20th. So anyway, I won't go through every one of them, but you can do that yourself. I went back and I looked at every one of them to see whether there was any kind of reasonable consistency to how this stock may potentially, without any certainty or any guarantee, but how it may potentially perform off of a pretty significant Bollinger Band snap on the daily chart. So my analysis told me that there's a reasonable possibility that there could be some sort of a move lower. I just wanted to take a quick peek at the 5-year just to see where we sit in the pattern, because I don't look at this stock on a daily basis like I do the indexes. And here's what I saw when I pulled up the 5-year. Look at the weekly bar is a very significant Bollinger Band snap. That's the weekly bar on a Bollinger Band snap. And you can see if you drew a channel line from this last significant high back here across that top, you've got a channel range in there. If I was really trading off of this 5-year pattern, I'd probably dig in and do a little bit more shorter term pattern identification. But that I wasn't trading this because I was thinking that it was at a level of resistance. I was trading it because of, like I said, 2 things. And the first is that Bollinger Band snap. And then the second thing is today we formed a pretty significant oops pattern. So the gap between yesterday's high, which was 675.81, and today's low, which is 707, is a pretty significant gap. So my decision to take that trade was based on those 2 things. It was the Bollinger Band snap as well as the oops pattern. And I know just from experience that 93% of the time, in general, an oops pattern will be satisfied. And by satisfied, I mean the price of the stock or index, when we're trading them on an index, will trade back down to the high of that price bar prior to the gap. So that's why I decided to take that trade. Now, in terms of the trade that I decided to take, the strike and expiration, I wanted to be just slightly in the money because I wanted to have a delta of 50 or more. I was looking for a delta that would give me a 50-cent profit for every dollar movement lower. So this one has a delta of 51. I opened the trade at 34.40, which was interesting. I opened it right at the mark. I mean, I got filled instantly right at the mark at 34.40, and then the mark decreased to 33.30. So that's fine with me. That's not really a big deal. I placed a closing order. Oh, let me back up first. I went out to October because on stocks, they don't move like indexes. Sometimes they will, and sometimes these higher price stocks will move significantly, even within a day or two. If I go back to this example, you can see that the high of that day was 654.88, and 2 days later, the low was 627.90. So down 30, down 27 points in 2 days. That's a reasonable move. So when you have a delta of 50, you could make $13 on that on a 27-point move. So I'm not saying that's going to happen, but I do think that with the Bollinger Band snap pattern and the oops pattern, that even if we were to continue to press higher for a little while, this might be a good trade to just have planted out there to take advantage of a potential profit. So I went out to October. It gives me a lot of time on this trade. I also uh, knew in terms of how much capital I was willing to put at risk that I wanted it to be somewhere around a $30 to $35 cost basis. So as I mentioned a couple days ago, it's really important that you start any trade that you place um, by deciding how much you're willing to put into the trade. Don't be led into a trade that looks really good and you're saying to yourself, I'm not really comfortable putting that much in, but that trade looks so good, I want to take it. Now, you want to start by knowing exactly how much you're willing to put at risk. I knew that the $30 to $35 range was reasonable for me and for the amount of capital that I was willing to, that I have allocated. So I started looking at different strikes and expirations. So kind of a sequence of three. First thing is I knew I wanted to be in the $30 to $35 range. I knew that I wanted to be slightly in the money or as deep in the money as I could go, but I wanted to build time into the position. So it took me just about 3 or 4 minutes. I browsed the options chain and I found what I felt to be the right combination. The 720 strike was slightly in the money, which was giving me a delta of just slightly better than 50. This is a delta of 51. It was actually a delta of right below 52 when I opened it. So we're right in that slightly better than 50 range. It met my criteria in terms of how much capital I was willing to put into the trade, 34.40. And I then realized I'm out to October. And so I've got from now till August, till September, till October, I've got nearly 3 months of expirations for this trade to sit out there. So once I realized that, I went back and I took a quick look at my 1-year daily chart. And once again, I went back to my Bollinger Band snap patterns and said, geez, what would typically happen or what could possibly happen over a 3-month period? I even went back to the 5-year weekly chart, said, all right, when I've had Bollinger Band snaps, where was a pattern that didn't follow through right away? There's one back here where the snap pattern occurred, and then for the next 2 weeks, we continued to move higher before it did, in fact, move lower. So there's never a guarantee with a trade. There is never a guarantee at all. But that thought process is what I went through in deciding I'm just going to go ahead and put this trade on. And folks, I'll tell you, it's unusual for me because I just don't trade that many stocks. I browse around and I look at these stocks on a regular but not necessarily daily basis. And I've got a handful of stocks that I do like to look at. And so anyway, that's my explanation of why I took that trade. You know, it's not the type of trade you should take if you're not comfortable taking that trade, or if you don't really understand Bollinger Band snaps, or you've not traded them before. So that's the summary of that trade, and I hope that helps you understand. One last thing, I placed a closing order to sell to close, and this is a good till canceled order. I placed a closing order to sell to close at 50. Now, 50 is a bit of a stretch from 33.50, but there was a little bit of thought that went into why I chose 50, and it is this. If we come back down, if we have the snap, which would be the movement back down inside the Bollinger Bands, and if we come back down and satisfy the oops pattern, that means that we'll trade back down to 675.81. So pull out your calculators or pen and paper and just kind of jot this thought process down. Current price of the stock is 713.20. If I subtract the high of yesterday's bar, 675.81, that means to satisfy the oops, the price of the stock will move back down $37.39 from where we were just trading. 37.39. If I take that 37.39 times 0.51 of the delta, it's 19. So that means that I could potentially have an improvement in the value of the mark of 19 points if in fact we moved lower to satisfy the oops. So I take that 19-point improvement plus the current mark of 33.60, and that tells me that the value of the mark could potentially be 52.66 if and when we retraced back down to satisfy the oops. So I just then decided to undercut that a little bit and say, listen, if we get to 50, I'm out of this thing. So I've placed a good till canceled order to sell to close at $50, and that would be a $15.60 profit, which is, you know, approaching, well, I'll tell you exactly what it is. 1560 divided by 3440, that'd be a 45% return. So if and when that occurs, that'd be great. Of course, I will check in on this position each day, and I may cut it off before we get to 50, but as of right now, that's where I have it set. So I hope that's helpful to you understanding why we deviated from our standard of taking all the index trades, but I liked that position. So let's take a look at NDX. We've been talking about this for the last several days. Nothing's really changed except one thing. We've been tracking this declining channel. We've been tracking this declining line of resistance that came off of these highs over here. We've talked about that the last few days. And today we moved higher. Today we moved higher and formed a new high within this raging channel, raging rising channel that we've seen in place since the 28th of June. And we were starting to peak above that declining line of resistance. Now, if you recall, a couple days ago, I told you that the angle of this channel was a bit suspect. The angle of this channel could change, and that's why I track this so closely on a daily basis. The angle could change because we only have one definition of support. So this can act as a pivot where the left side of the channel could come lower, although I don't think it would come lower because of these highs up here. But the right side of the channel could raise higher, and actually we could change the angle. Right now we have a slight downtick to the angle of this channel. It could end up being a sideways channel, or it could end up being a rising channel, before we reach final confirmation of where this rising cycle is going to end. This rising cycle will end at some point. That is the one absolute guaranteed thing I know about trading these indexes. There will be a declining cycle form. I don't know when that's going to occur, and I need to wait for the market to tell me. Right now, the market has told me it wants to go a little higher. So what I did is I slightly modified. I just click on the channel and I click move, and I just slightly tick my line of resistance a little bit higher to incorporate the current price point. Now, at some point, that will reach what we call a natural level of resistance, and there will be a series of price points leading away from that high. I can't say that that's taking place right now because right now we're trading near the high of the day. High of the day is 46.59, and we're trading at 46.57. So we haven't seen any evidence yet of a price movement away from that line of resistance. And until we do, I will continue to just nudge my resistance line up until either we verify a natural level of resistance, which would take 2 or 3 days of declining price points, or until it just makes no sense anymore that by adjusting this channel, it no longer corresponds whatsoever to prior natural levels of resistance or even natural levels of support. So I'm continuing to track that. Within that channel, we still have a rising channel that ties back to this series of highs here. And of course, we're coming across that top that we're forming today. One other thing about today's price activity, I mentioned a couple days ago that we had oops patterns to satisfy. We have an oops pattern to satisfy back down to 45.29.72, and we have an oops pattern to satisfy back down to 42.91.43. Well, we have a new oops pattern formed today. So the first stopping point in terms of satisfying oops would be 46.17.47. So we have an oops pattern that's about 40 points below where we're currently trading. It will come down and hit that at some point, 93% probability that that'll happen, as well as come down and hit the other two highs. So what we need to do at this point is pay attention to our able trend charts, pay attention to the signals that we see on the short-term 5, 15, 3, 9 able trend charts, and also start monitoring the 30, 90, and maybe the 61, 80 time periods for potential sell signals or breaking below support. It's not a matter of if that's going to happen. It's really a matter of when. The when could be after we reach somewhere much higher than where we're currently trading. The when could be as soon as the next couple of hours. I don't know when the when is going to happen. I don't know when it's going to happen. What I do know is it will happen, because one of the things you can be absolutely guaranteed and certain about is indexes run in cycles down, indexes run in cycles up, and we're just waiting for the next down cycle here. I'm waiting for the down cycle, tentatively looking for potential rising bias positions, which I know Michael took a couple of today. I'm not taking any right now. I'm holding firm with what I have, and I'm looking for the next beginning of a new pattern. So let's take a look at SPX. SPX is very similar. I've not made any adjustments to the channel today on SPX. You can see here that we've moved just a little bit higher, cresting right at that line of resistance, that sideways line of resistance that we've been tracking for quite some time. Hang on just 1 second here. There we go. So paying attention to that, but I'm not making any modifications to my channel. We had a series of days which I thought may potentially indicate that we'd reached a point of exhaustion. because we had 4 days where we were pretty flat to that line of resistance. Today, we're trying to peak above it a little bit, and Able Trend today has been showing more and more indications of rising bias. So, all that's okay. I'm not here to fight the market. I'm not here to second guess the market. I'm not here to try to anticipate that it's going to do something it has not yet indicated it's going to do. We are much better off, and we will always be much more successful if we can just take our trades based on the signals. Now, some of you may follow along with me and trade the Bollinger Band signals like I did on ISRG. Some of you may trade along and prefer to trade only the Able Trend signals. It's entirely up to you. It's a very personal choice, but whatever you decide to trade, um, follow those signals. Let's take a look at a 60-minute here. On the 60-minute chart, I can see where we came up to a Bollinger Band snap today. We stayed there on the second 60-minute bar. We just drifted sideways. So when we hit that high today, which was a new intraday high, 2175.63, that's a new all-time intraday high for SPX. We flattened out right there, and we're still flattened out at that line. So for all practical purposes, you can see I could nudge this line of resistance just slightly higher, and we would very easily capture those two natural levels of resistance. But I'm not going to do that just right now. Let's just take a quick look at RUT, and then I want to take a look at one other thing that we don't normally look at. RUT is very similar. You can see how we've hit these highs, these natural levels of resistance, and we're doing the same thing potentially today, but it's not yet confirmed. A natural level of resistance, if you're just new to that term or that thought process, is where the market has defined a top. Market has moved up to that level and then moved away from that level. So right now we've moved up to a level, but we've not moved away from it. So this is a potential natural level of resistance, but it certainly is not guaranteed. Let's look at the 1 year. On the 1 year, it's very clean to see how for the last 7 trading days, we've pretty much stalled out right at that sideways line of resistance. So I'm still holding firm where I am on my positions. I got a couple of positions that I need to manage. Got a couple of positions that are further out in time that not at all concerned about. Just going to be patient and wait. Not looking for a lot of new trades personally right now, and this is every trader is different, but I'm not looking for a lot of new trades right now until I start to see more evidence of either breaking above resistance on the 3 indexes and some consistency to that, or possibly starting to form the next declining cycle. What I did want to share with you, if we go back to SPX for a minute, is the VIX. Now we talk about the VIX periodically, but I think it's important that you take a look at it once in a while and just keep things in perspective. The VIX is trading near its all-time lows. Okay? It's getting right down to an area where it's 5-year lows. Let's see here. 5-year low is 1028. Okay, we're trading at 1189. The VIX, just to oversimplify this, the VIX is really an indication of how the general market is feeling in terms of fear and direction of the market. When the VIX is very low, option prices have a tendency to be suppressed on SPX because this is the volatility index for SPX. So option prices are lower. If you're trading credit spreads, that means that it's more difficult to get a really good credit on a credit spread that is out of the money, well out of the money. You're going to have to be closer to the money because volatility is lower. So when volatility is this low, it's a wise choice, in my opinion, to shift from credit spreads to long vertical spreads instead. So you're going to have lower premiums, so you're going to be paying less. And if volatility starts to spike while you hold that position, it actually helps the value of your long spread. So just kind of following the principle of buying premium when volatility is low and selling premium when volatility is high. But the other thing I think that it's important to pay attention to here is there is an inverse correlation between the volatility index and SPX. Um, and if you take a look at both of them, you'll start to understand that when one is low, the other is high, and vice versa. So when you have both of them at their extreme ends of their range, with SPX forming a new all-time high today, and VIX forming a price pattern that is pretty much close to, but not at, its a lowest low, there is additional indication of a potential movement that VIX will move higher, because VIX always cycles just like an index, cycles down, cycles up, cycles down, cycles up. There will be something that will prompt the market to say, hold on a second, I'm not so sure about this. Volatility will increase and price of SPX will decrease. So it happens all the time, and you can look at the same thing on NDX. The volatility index for NDX is VXN, and you can see where we're trading, 1443. Look at where we were trading in August of last year, 4672. In January of this year, 3540. 3408 in early February. Even as recently as the 27th of June, we're trading with a volatility level at 2710. When you see the volatility index hitting a Bollinger Band snap, that's also something to pay attention to. See, just because this is a volatility index doesn't mean that it doesn't act like a stock or act like an index that we typically trade. A lot of people actually trade the volatility indexes. So let's take a look at a 1 year. And you can see here the Bollinger Band snap pattern that we had on the 1 year daily on VXN. That was on the 24th, followed through on the 27th. I mean, you're starting to get to a point where it's almost guaranteed that volatility was going to decrease, which would tell us the price was going to increase. Same thing back here. So volatility is kind of flattened out, leveled out here, and that would tell me that at some point we're going to see a rise in volatility, which will prompt a decrease in price. So just going to do a real quick capture of the channel here. You can see that we're basically trading at a declining level of support. That channel pretty much corresponds with the Bollinger Bands. It would not at all be a surprise to see us bounce higher here. So I hope that's helpful to you folks in terms of just having a better understanding of your charts and how to take a look at those and understand what to do with those. As I've said many times, I don't take trade signals based on the bar charts except for Bollinger Band snaps, but I do pay attention to the bar charts because I think that they are important indicators of what the macro view is. And I'll close this market summary with this today. This is a quote by Sir John Templeton. Sir John Templeton was quoted as saying, "Bull markets are born on pessimism, grow on skepticism, mature on optimism and die on euphoria. He went on to say, the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. If you want to have better performance than the crowd, you must do things differently than the crowd. So in very simple language, I've heard that same idea discussed many times, and Warren Buffett has said many times, when the average retail investor starts getting on the bandwagon in a rising market, that's typically one of the first indications that that market or that particular cycle up is about ready to end. Most retail investors, most average Joe investors are late to the party, and they wait until the whole rally has proven itself, and then they start to feel comfortable, and then they want to get in, they want to participate, and they they get in just when things are starting to fall apart. So, not saying that's happening here, but I just thought I'd share that. I saw that quote last night, Sir John Templeton, who I have a lot of respect for his history, and thought I'd share that with you. So, hope that's helpful to you. We're going to just pay attention to our um, April trend charts now and see what happens for the rest of the market day.